Law Committee. Good afternoon all. I'm Ms. Malika Devendra, Chairman of the Commercial and Allied Law Committee. Welcome you all to the first event of our committee. As you know, Commercial and Allied Law Committee mainly focuses, our committee is mainly comprised of all the professionals. Our committee is mainly aims to provide updates regarding amendments in various commercial and allied laws. Also, it educates and provides guidance on complex commercial laws through webinars, seminars, study circle, publication, etc. The vision of this committee would be to develop a dynamic environment for wherein knowledge and expertise converge to empower professional community with cutting edges towards insights, ensuring that there is a forefront of the legislative changes and development in the commercial law landscape. Also, we would like to say, would like the President, sir, to give his opening remarks for this very first event of this committee.
Thank you, Malika, for the nice introduction of your committee. I welcome each and everyone. Respected Dr. S.K. Jain, sir, Chairperson Malika, our committee members Rajan Bhai, Mr. Raj, Kaushik Bhai, and all the participants today who are here on this last Friday of the month of August, where we are gathering today to hear very interesting and important topic on the ROC related adjudications and rest of the relevant matters. Very important topic today, and Chamber of Tax Consultant is on this front foot to take the educational activities in order in this compliance months going on, which we are all busy nowadays. And I'm very happy to note that as many as 386 participants have enrolled today for this particular webinar. I'm very glad that members are eager to update themselves through the means of chamber. And I'm really also equally excited that I've come to know that there are many non-members who are attending today this particular webinar. So for the benefit of those who are non-members of the chamber, I would update about the Chamber of Tax Consultants and its activity quickly. Established in 1926, the CTC is a 98 years non-profit organization with the core objective of professional development of its member spread across tax, accounting, and legal aspects. Yes, we are into mainly taxation and accounting and other law practices education related our seminars and residential refresher courses, RRC, that is study circle meetings, workshops, budget meetings, etc. We have more than 3,500 members across India who are chartered accountants, advocates, company secretaries, and tax practitioners. You can become member either as by way of life member, ordinary member, associate member, or student member. Yes, our student committee is also doing very lot many activities for the student, whether it is debate competition or moot court competition. In fact, day after tomorrow, rather on Monday, we have 2-day course for various basic aspects of taxation and audit related, accounts related, some of the professional ethics for especially meant for students and especially meant for fresh article students of the CA course. Chamber of Tax Consultant has Mumbai and Delhi chapter, and we have study groups in Pune, Bangalore, and Hyderabad. Our day-to-day function is undertaken across various subjects committees such as direct tax, indirect tax, international tax, IT Connect, and Students Committee, as I mentioned. The Chamber publishes its journal every month, which is a topic-based known as Special Story and covers latest updates about the taxation and other laws. CTC also makes representations and suggestions to the government in the matters relating to taxation and other laws at appropriate time. And friends, as I mentioned, Chamber was formed in 1926. Next year, we will be having our centenary year, wherein lot many educative programs are being planned. So I would suggest or request and appeal to all those who are non-members to enroll themselves as member of the chamber, get updates from the chamber through emails and our WhatsApp group and our social media handles. CTC Connect, you can access CTC Connect on our LinkedIn, Facebook, Instagram, YouTube, and get our updates once you become member. And of course, Once you become member, you get lot many advantages. We have 4 different RRCs throughout the year. Direct tax, we have RRC. Then we have indirect tax RRC. We have FEMA RRC, and we have international tax RRC. So these are our activities, and I would suggest if you become member, we will also get your benefit of your knowledge and inputs. Thank you, friends. I will not take much of the time before you and the learned speaker. Very senior person we have today to lead through this session today. And over back to Malika for further proceedings.
Thank you, sir. Thank you so much for the quick introduction about CTC as well as the entire events which we go through the entire year. Also, I would request Raj to quickly introduce in brief Dr. S.K. Jain's profile.
May I request you to speak little loudly, please? I hope everybody. Raj,
Yes,
are you
sir.
able to?
Yes, sir.
Just little loudly, please.
Yes, sir. Sure, sir. Sure.
Thank you.
Thank you very much, Chairperson, ma'am, for giving me the immense pleasure and a privilege task to introduce our guest speaker for the session, the first session of our committee. I personally know him as an institution in our profession himself, Dr. S.K. Jain, sir. He needs no introduction, but as a formality, I will introduce the speaker for the session. Dr. C.S. S.K. Jain, sir. He is a MCom, LLB, a doctorate, a PhD. He is also having his own peer-reviewed firm of practicing company secretaries in Mumbai. Dr. Jain has earlier worked in a reputed organization and is practicing since 1997. He has been a member of Central Council of ICSI in the past. He has also been past president of the Institute of Internal Auditors, Calcutta chapter. He has been a General Secretary, Association of Secretaries and Advisor in Kolkata. He is currently the chairman at Mahapragya Public School, Mumbai coordinator, and also a coordinator of the Dadar Knowledge Center of WRC of ICSI. In the past, he has organized various conferences, whether in India or abroad, including he was the deputy leader of high-level team which visited Japan in 1987 for studying high productivity levels among Japanese giants including Suzuki, Mitsubishi, NEC, Hitachi. He is a regular speaker across professional forums including knowledge centers and study circles of the ICSI and the ICAI. He has written multiple books and articles on various topics including capital markets, other professional subjects. He has also been honored with various merits and awards, including the Great Achievers of India Award presented by Front for National Progress in New Delhi. He was awarded 13th Bharat Ratna Dr. Ambedkar Award 2023 from the hands of the 14th President of India, Sri Ramnath Kovind ji. Maharashtra Ratan Award by Maharashtra Societies Welfare in 2023, Bharat Bhushan Rashtriya Puraskar by International Human Rights Ambassador Organization in 2023. He was awarded the Rashtriya Abhiman Puraskar 2023. He was also honored with Rajiv Gandhi Pragati Award presented by the International Business Council in New Delhi and many more awards. With this brief introduction, I hand over to Dr. S.K. Jain Saab to take us through the very important and critical topics of adjudication of ROC and RD orders. And sir, we also request if e-adjudication, which is recently been introduced, if that also is covered in the present. Thank you very much, sir. Over to you, sir.
Thank you, Rajji. Sri Vijay Bhatt ji, Sri Raj Kapadia ji, Kaushik ji, Malka ji, and participants. It is my proud privilege to be invited by the chamber to speak on adjudication under the Companies Act 2013. Before I begin, I must tell you that under the Companies Act 1956, there was only provision for compounding of offences. There was no provision for adjudication by paying penalties. So, under the Companies Act 2013, a new provision has been inserted for adjudication of offences. by payment of penalties. So what is the difference between the compounding and adjudication? So wherever the word fine or imprisonment or both has been used in the Companies Act, wherever the word fine or imprisonment or both appear under various sections of the Companies Act, they are all compoundable offences. Wherever the word fine and imprisonment is used, it is not compoundable. So compoundable offences are those which are compoundable either by payment of fine or by punishment, by sentencing. But where the word fine and imprisonment is used, it is not compoundable. And then under this is so under section 441 of the Companies Act, which deals with compounding of offences. And once there is, if the compounding is done, then there is no stigma. That means as if no violation has been done. Now, under the Companies Act 2013, the word fine has been replaced by the word penalty in various sections. So earlier, where the fine word appeared, it was compoundable. It is still compoundable wherever the one word fine appears, but where the fine has been replaced with the word penalty, it is only through the adjudication process. And now the question arises, who is the adjudicating officer? So the central government has designated registrar of companies of various jurisdictions as the adjudicating officers. So ROC, when any violation occurs, then ROC normally issues so-called notice and gives 15 or 30 days time to appear, respond to the so-called notice. And if the so-called notice is responded by the company or its directors to whom the so-called notice has been issued, they may ask also for personal hearing. So what generally we do when we receive any so-called notice from ROC alleging certain violation of the Companies Act, then we see whether the word is fine is used under the various provisions of the Companies Act. If the word fine is used, then we make compounding application. But wherever the word penalty is used, it is through the adjudication process only. Now the MCA has also framed Companies Adjudication of Penalties Rules 2014. So what we have to refer section 454 for adjudication, and so far as procedure requirement is concerned, it is contained in Companies Adjudication of Penalties Rules 2014. So this is a brief introduction of the subject. Now I will take up section 454 of the Companies Act 2013. 1 minute. 1 minute. So section 454 of the Companies Act deals with adjudication of penalties. So as I told that wherever under various sections the word penalty is used, adjudication process is there. So it says that the central government may by order published in the official gazette appoint as many officers of the central government. So ROC has been designated as a adjudicating officer. So ROC is the adjudicating officer. The adjudicating officer then adjudicating officer may by an order impose the penalty on the company the officer who is in default, or any other person as the case may be. So under the Companies Act 2013, either the punishment can be given to the company, fine, company cannot be imprisoned. So wherever imprisonment provision is also there, the word used is the officer in default or any other person. So the adjudicating officer by an order impose the penalty on the company. So on company, only penalty can be imposed. And on the officer who is in default or any other person as the case may be. So officer who is in default, we have to refer to section 2, subsection 60 of the Companies Act 2013, which defines the officer in default. So officer in default, if we see Companies Act 260, then who are the officer in default? If the company has managing director, then managing director will be liable for any violation. If there is a whole-time director, he will be liable. Then there are key managerial personnel. We have to refer to section 203 of the Companies Act, and the key managerial personnel includes the company secretary, CFO also. So key managerial personnel such as director, a specified board, are supposing there is no managing director, there is no whole-time director, then the board of directors may make any director among themselves, any of the director among themselves to be responsible for any contravention of the provisions of the Companies Act. If that person agrees that he will be responsible for any contravention of the Companies Act, then he alone will be responsible. Then there is a form which is to be filed with ROC, and then for contravention, that person will be responsible. Otherwise, all the directors will be responsible. So you have to refer to section 260, subsection 60 for the definition of officer in default. So the adjudicating officer by an order impose the penalty on the company, officer in default, or any other person as the case may be, stating therein any non-compliance or default under the relevant provisions of the Act, and direct such company or officer in default or any other person as the case may be to rectify the default. So one thing, supposing any non-compliance has occurred, supposing financial statement has not been filed, annual return has not been filed, so the ROC may ask that company to rectify the default by filing the financial statement, annual return, or other documents. And then can, because the violation has occurred, so he may also impose penalty on that company. So if provided that in case of default relates to non-compliance of subsection 4 of section 92. So 92 deals with annual return. So supposing annual return has not been filed, our financial statement under section 137 have not been filed. So if the default has been rectified either prior to or within 30 days of the issue of the notice by the adjudicating officer, no penalty shall be imposed. So if the annual return or financial statement is filed within 30 days from the issue of so-called notice, no penalty will be imposed. So it is better that the financial statement and annual return are filed as soon as any so-called notice is issued, so that no penalty can be imposed. Now the adjudicating officer by an order impose the penalty on the company and officer in default, stating any non-compliance or default under the relevant provisions of the Act. The adjudicating officer shall, before imposing any penalty, give a reasonable opportunity being heard to such company or officer in default or any other person, such company and officer in default. 1 minute. Next. Now, any person who is aggrieved by the order of adjudicating officer, that means ROC, under subsection 3, may prefer an appeal to the regional director having jurisdiction in the matter. So appeal can be filed with the regional director. Now, here I would like to also make it clear that adjudicating officer is ROC. He has been designated by the central government by way of notification issued on 24/3/2015. So ROC is the adjudicating officer, but so far as compounding is concerned, the provision is altogether different. There the compounding officer is RD, where RD is authorized up to impose fine up to 25 lakh, or NCLT. So far as compounding is concerned, the compounding officer is either regional director or the NCLT bench. Now, every appeal, so against the order of ROC, appeal can be filed with the regional director. Then regional director, when appeal is filed, then regional director will issue a letter and provide an opportunity of hearing. The regional director may, after giving the parties and to the appeal an opportunity of being heard, pass such order is confirming, modifying, or setting aside the order appealed against. So the regional director, when appeal is filed against the order of ROC, he can either confirm the order, modify the order, or set aside the order. So now the question arises whether the RD can reduce the penalty where the minimum penalty is prescribed. So it has been a very intricate question, and a view has been taken that RD has no power to reduce the penalty below the minimum penalty which is prescribed under the Companies Act. But some bench of NCLT and the regional director has reduced the penalty below the minimum penalty which has been prescribed, because the RD has vast power. He can modify the order and also set aside the order. So where the company fails to comply with the order made under subsection 3 or subsection 7, as the case may be, does not pay the penalty imposed by the adjudicating officer or the regional director within a period of 90 days from the date of receipt of the copy of the order, the company shall be punishable with fine which shall not be less than 25,000 rupees, but which may extend to 5 lakh rupees. So non-compliance, if there is a non-compliance of the order passed by RD or ROC, then a company can be penalized also. Now, who can adjudicate the penalties under the Companies Act 2013? As per Rule 3.1 of the Companies Adjudication of Penalties Rule 2019, the central government may appoint any of its officers not below the rank of registrar. Now, as I told you, the central government has issued a notification on 24/3/2015 and has appointed various ROCs as adjudicating officer for adjudging the penalty in their respective jurisdiction. So ROC is the designated officer who acts as an adjudicating officer. Whether adjudicating officer can impose penalty on non-compliance or default under section 92(4) or 137 of the Companies Act 2013, in case the default relates to non-compliance of section 92(4), deals with annual return, 137 financial statement, and such default has been rectified either prior to or within 30 days of the issue of notice of the adjudicating officer, no penalty can be imposed. On whom the penalty may be imposed by the adjudicating officer? On the companies and on the officers who are in default or any other person. Now, what is the process of adjudication? Now, as I told you that ROC is the adjudicating officer. So he issues a so-called notice to the company and officer in default. So the so-called notice is issued, and I also mentioned that there is a rule which is known as Companies Adjudication of Penalties Rule 2019. So you have to refer Rule 3.2 of the said rule. The adjudicating officer shall issue a written notice to the company and to every officer of the company who is in default to so cause why penalty should not be imposed on it or him. So ROC will issue so cause notice under Rule 3(2) of the penalty rules. As per Rule 3, Sub-Rule 3, every notice under subsection Sub-Rule 2 shall indicate the nature of non-compliance. So when you receive the so cause notice will mention the relevant provisions of the Companies Act which have not been complied with, there has been non-compliance, or there has been default under the Companies Act 2013, and default has already been committed. Then are made by such company and officer in default, and also draw attention to the relevant penal provisions of the Act and maximum penalty which can be imposed on the company and officer in default as the case may be. So in the so cause notice, the nature nature of violation will be covered. Then what will be the penalty which can be imposed, relevant section under which the non-compliance has occurred, that will also be mentioned. And then the so cause notice invariably mention that if the person to whom the so cause notice has been issued, if he wants to give reply, he can give reply either within 15 days and maximum 30 days from the date of service of the said so cause notice. Then the period of 15 days or 30 days can be further extended. As per Rule 3(4), the above time limit may be extended by a further period not exceeding 15 days if the company or an officer satisfies the said officer that it has sufficient cause for responding to the notice. That means it is a time-bound process. The ROC will give time maximum. He can extend by another 15 days. So maximum period is 30 days. Then opportunity of being heard. The Act provides for providing an opportunity of being heard before imposing of any penalty to the company or officer in default or any other person. It is section 454(1)(4). Now step 3, inquiry by adjudicating officer, notice for hearing. As per Rule 3(5) of the penalty rules, if after considering the reply given by the company or officer or any other person as the case may be, the adjudicating officer is of the opinion that physical appearance is required, he shall issue a notice within a period of 10 working days from the date of receipt of such reply, fixing a date of appearance. So invariably when we receive so cause notice, we ask for personal hearing, then personal hearing opportunity is also given. Then step 4, hearing. Now hearing takes place as per Rule 3(6). If on the date fixed for hearing and after hearing, after giving a reasonable opportunity of being heard to the persons concerned, the adjudicating officer may, subject to reasons to be recorded in writing, pass any order as it thinks fit. Now adjudicating officer has issued you so cause notice. You have responded to so cause notice by giving reply. Then you can ask for the opportunity of being heard. Then the notice of hearing is also date, fixing the hearing date. And then when you appear before ROC after hearing you passes the order. And the whole process is time bound. Now the adjudicating officer, after hearing the concerned company or officer in default, then passes an order within 30 days from the expiry of the period to so cause, as and such extended period where adjudicating officer does not require physical appearance. So if it doesn't require any physical appearance, the order is generally passed within 30 days. And where the persons want personal appearance and hearing, then order can be passed within 90 days of the issue of the so cause notice, receipt of so cause notice. every such order passed shall be dated and signed and shall also state reason for requiring physical appearance under sub-rule 5 of the rules. Now, the copy of the order will be sent to the concerned company and officer in default to the central government. Then we come to next step. Now, question arises that ROC can impose penalty. So, penalty, there is also a minimum penalty that's prescribed. And I also told you that the minimum penalty, the RD can reduce below that minimum penalty. But what are the factors which have to be taken into consideration while adjudging any violation and quantum of penalties to be imposed? So these are the factors which ROC has to take into account. These factors include size of the company. So it may be a small company, it may be one-person company, it may be a big size company. So depending on the size of the company, whether it is a producer company, whether it is a one-person company, a small company, etc. Then the nature of the business which the company carries on. This is the factor also to be considered into account. Injury to public interest, whether any non-compliance has caused any harm or prejudice to any third person. Then what is the nature of default? Then repetition of the default, whether the default or violation is repetitive. So if the default is repetitive, then the punishment by way of fine can be more. The amount of disproportionate gain or unfair advantage, whether any gain has been made or unfair advantage has been taken, wherever quantifiable. And from my experience, I can tell you that in no case, whether any third person has made any gain or any loss has occurred, it is never quantified. It is unquantifiable. Loss cost to an investor or group of investors or creditors. So these are the factors which have to be taken into account while passing adjudication order for imposition of penalty. Now, provided that in no case the penalty imposed shall be less than the minimum penalty prescribed, if any, under the relevant provisions of the Act. So far as penalty is concerned, in many sections you will find that either minimum penalty not less than, say, 1 lakh rupees or 5 lakh is can be imposed, that has been used, or between 1 lakh to, say, 25 lakh. So the discretion lies only when the fine can have some discretion. That means if the fixed minimum penalty is prescribed, ROC has no power to reduce less than that. But if the discretion is there, supposing the penalty can be imposed from between 1 lakh to 25 lakh, then ROC can impose minimum penalty of 1 lakh also, 5 lakh also, depending on the nature of the violation and seriousness of the violation, and whether it is a repetitive violation or not. Under Rule 313 of the said rules, in case a fixed sum of penalty is provided for default of a provision, the adjudicating officer shall impose that fixed sum in case of default therein. Rule 314 of the said rule, payment of penalty shall be done only through portal of Ministry of Corporate Affairs. So penalty, how you have to deposit, it is on the portal of Ministry of Corporate Affairs, Bharat Kosh, we make payment of the penalty. Then these all sums realized by way of penalties are deposited in the Consolidated Fund of India. Now, we will now deal with process of adjudication. Now, appeal against the order passed by the adjudicating officer, that means ROC, one can file an appeal within 60 days. So any person aggrieved by an order of adjudicating officer under subsection 3 may prefer an appeal to RD having jurisdiction in the matter within a period of 60 days from the date of receipt of the copy of order. Now, then RD will give an opportunity of hearing to the person concerned. So you can file an appeal within 60 days against the ROC order, and then ROD will fix the date of hearing and will provide an opportunity of hearing. Then as we can also appear before as an advocate, company secretary, chartered accountant, can also appear before the RD as a authorized representative of the party concerned. Then what is the process? When the appeal is received, then the date on appeal, the RD office will make endorsement of the date when it is received. It will be registered. If the appellant fails to, if there are any defect, the RD office may ask the party to rectify the defect within 7 days, and 7 days can be extended to next 7 days also. Then a copy of the notice will also be given to the adjudicating officer who had passed the order. So before RD, the adjudicating officer may also remain present at the time of hearing of the appeal. Reply of adjudicating officer will also be placed. Now, there is an important section under the Companies Act, which is 446B, and it provides for lesser penalties on certain companies. So if the company is a one-person company, or a small company, or a startup company, or producer company, then the amount of fine, the amount of penalty which is prescribed in these cases, 50% of the prescribed penalty can only be imposed, and the maximum is 2 lakh rupees. So in case of one-person company, in case of a small company, startup company, or producer company, the fine which can be imposed will be 50% of the prescribed penalty amount, and maximum rupees 2 lakhs in case of a company, and rupees 1 lakh in case of an officer in default. So maximum fine which can be imposed on the company is 2 lakhs, and on any officer in default, maximum penalty which can be imposed is rupees 1 lakh. And that too, supposing the prescribed penalty amount comes to say 1 lakh, then 50% of that, only 50,000 can be imposed, not minimum 2 lakh in case of company or 1 lakh. So this is the outer limit. That means on company, maximum 2 lakh can be imposed, and on officer in default, only 50% of the prescribed penalty can be imposed. And in case of one-person company, startup company, or a small company, 50% of the prescribed penalty will be imposed, but subject to this limit. Then startup company and producer company are defined. I will not take time. Now, there is a whole list where the word fine has been imposed by the word penalty. I will skip this list, and I will circulate this my PPT to other. Now, what I will do, I will now run through various orders passed by the adjudicating officer and appeal order passed by regional director. Give me some time. Order निकाल. यहाँ से ले लो, यहाँ से लो. Yeah. Now, I will run through some judgments. In Queen Logistic India Private Limited versus ROC, the learned tribunal held that a plant company and its directors are liable to be penalized under Section 166, 168 of the Companies Act 1950 for violation of Section 166 of the Companies Act 1956. The violation continued up to 31/3/2014. Thereafter, they are liable to be penalized under Section 99 of the Companies Act for violation of subsection 1 of Section 96 of the Companies Act 2013, so and so, depending on the nature of offense and the gravity, and if it is pleaded by the applicant or reported by the Register of Companies, the tribunal is required to notice the relevant factors. The relevant factors are the gravity of offense, the act is intentional or unintentional, the report of the ROC, the tribunal will consider all these aspects. Now, give me 1 minute time. One minute. Now, this is the matter. The company has filed INC 24 on 22/10/2021 wide SR number so and so. It is noticed from the attachment that the company's sin is not mentioned on the letterhead of the company. So, if the sin is not mentioned, then penalty can be imposed. Even if the director's DIN number is not mentioned, penalty has been imposed. So here in this case, sin was not mentioned on the letterhead of the company. Hence, the company was directed to file adjudication application for non-compliance of the provision of Section 12(3)(c) of the Companies Act 2013. So the violation has occurred under Section 12(3)(c) of the Companies Act. The company has submitted the adjudication application on 11/11/2021. Now see, on company the penalty of 7,000 was imposed, and on each 5 director penalty of ₹2,000 was imposed. So where the sin number is not mentioned, it can affect penal provision, and in this case penalty has been imposed on the company as well as on the directors. Now we take another case. In the matter of adjudication of penalty under Section 454, so and so, by Comviva Technologies Limited, an application dated 26/7/2022 has been received from the company admitting non-compliance of Section 135(5). So 135(5) of there is a non-compliance of Section 135(5), whereby it has been stated that the company was required to spend 2,88,65,811 as CSR obligation. So 135 deals with CSR obligation, and company has to spend 2% of the average net profit of last 3 years as computed under Section 350 of the Companies Act. So here there was a non-compliance of Section 135. CSR amount was not paid. However, was not spent. However, the company spent ₹2,83,00,000 only. So against the amount which was required to be spent, 2,88,65,811, the company had already spent 2,83,15,689 towards CSR obligation. So the shortfall was hardly 5 lakh. Now the applicant company and his officer who have made the default in compliance with the provision of section 135(5) by not transferring unspent CSR amount to a fund specified in Schedule 7. So if you do not spend, then you have to deposit the amount in the fund which is specified under Schedule 7 of the Companies Act within a period of 6 months of the expiry. So this unspent amount of rupees 5 lakh should have been deposited into a fund which is specified in Schedule 7. Now, in exercise of the power conferred on the adjudicating officer by notification dated 24th March 2015, and having considered the reply submitted by the notary in response to the notice issued by letter number so and so, I do hereby impose the penalty on the company and officer in default for violation of section 135(5) of the Companies Act, read with Rule 10 of Companies Corporate Social Responsibility Policy, Rules 2014. So what was the penalty imposed for on company? The penalty was imposed 1 crore 10 lakh 244, then CO 55,002, and others also, which the director, CFO, CS, you will find on CFO the penalty has been imposed, CS the has been imposed, CO the penalty has been imposed, on each director the penalty has been imposed. So the amount was 11 lakh to 44, not 1 crore. So on company, 11 lakh penalty was imposed, and on each director, CEO, CS, and on this, the penalty of rupees 55,012.20 was included. Now you will see that under section 135, the company has to spend 2% of its average net profit of last 3 years towards CSR activities. Here the company was required to spend at 2 crore 88 lakh, it spent 5 lakh less, and the penalty, if you calculate on company itself, the penalty has been imposed on each director as the company has been imposed. CS, on CS also it is imposed, CEO also the penalty has been imposed. Now I will take another case. In the matter of adjudication of penalty under section 454 of the Companies Act, by the company's name is Kurz Venture Capital Limited. The company has failed to file its financial statement along with all documents which are required to be attached to such financial statement under the Act for the financial year 2019-20 in compliance of section 137 of the Companies Act 2013 and rules thereunder. Here, the violation is not non-filing of the financial statement for one financial year, that is 2019-20. Now, the undersigned means the adjudicating officer has reasonable cause to believe that the provisions of section 137 of the Companies Act 2013 has not been complied with. The company and its officer in default have violated the provisions of section 137. Here I tell you, section 92 deals with filing of annual return. Section 137 of the Companies Act deals with financial statement. So every company is required to file financial statement within period of 30 days from the date of AGM. And the annual return is to be filed within a period of 60 days. So here the company has not filed financial statement for 1 year, that is 2019-20. And see how much penalty has been imposed on company. The penalty of rupees 65,300 has been imposed, and on two directors 50,000 each the penalty has been imposed. So all companies should be very particular in filing financial statements and annual returns within prescribed time limit, 30 days, within 30 days of the AGM, financial statement within 60 days of AGM annual return. Now we come to another case. It is the matter of fit chairs. In this case, on perusal of application so and so, it has been noted that the company secretary Prakash Jha resigned from the company on 15/10/2019 from the office of whole-time company secretary. So here, the company secretary was required to be employed. That company secretary resigned on 15/10/2019. And thereafter, the company appointed a whole-time company secretary on 10/5/2021. So you can see that there was delay in appointment of another company secretary in replacement of the company secretary who had resigned on 15/10/2019. So the company was required to appoint the new company secretary within 3 months. It appointed on 10/5/2021. During this period, the paid-up share capital of the company was more than 10 crore rupees. Therefore, the company was required to appoint a full-time company secretary under Section 203 of the Companies Act, read with Rule 8A of the Companies Appointment and Remuneration of Managerial Personnel Rule 2014. So there was a delay in appointment of full-time company secretary. So the violation was of Section 203 of the Companies Act, because the paid-up share capital of the company here is 10 crore. Now, in terms of the provisions of Section 203(4), read with 454 of the Companies Act, this office had issued so-called notice number so-and-so, dated so-and-so, to the company and officer in default. The company, the reply was given. Who was the notary? Sri Akshay Kumar Lal. On behalf of the company and himself, he replied on 5/4/2022, and this reply was in response to the so-called notice, wherein the company cited difficulties it faced on account of COVID-19 pandemic in appointment of new whole-time company secretary. So company took the plea that it could not appoint the company secretary because of the COVID. Now you see, COVID occurred on 15/3/2020. Here, the earlier company secretary resigned on 15/10/2019. There was no COVID pandemic at that time, but company took the stand that it could not employ a new company secretary because of COVID-19 pandemic, which was not true. So a hearing was fixed on 18/5/2022 as requested by the company-wide email dated so-and-so. Mohit Singhal CS appeared, and what is the penalty imposed? Now you see, on company, penalty of 5 lakh was imposed. On Akshay Kumar, rupees 4,41,000. On Siddharth Mal, director, 4,51,000. On another director, also 4,41,000. The total penalty amount altogether is about 19 lakhs. So, non-employment of company secretary within time has attracted penal provision, and hefty penalty has been imposed on the company and its directors of the company. Now, I take another case. As per Section 129(1) of the Companies Act, the financial statement shall give true and fair view of the state of affairs of the company, comply with the accounting standards notified under Section 133, and be in form provided in Schedule 3. So what is the requirement? Requirement is that company has to comply with all applicable accounting standards under Section 133, and company has to draw its balance sheet as per Schedule 3. Financial statement should be in the format as prescribed in Schedule 3. Now, this is the requirement of law. For each class of equity share capital as per Schedule 3 of the Companies Act, the company needs to disclose in the financial statement the shares held by each shareholder holding more than 5%. Now, Schedule 3 requires that you have to mention the name of shareholder if their shareholding in the company exceed 5%. So their name should appear in the Schedule 3, that means balance sheet, and the number of shares held. However, the company has not disclosed the same in the financial statement for the year 2019-20. Now, company has not mentioned the name of the shareholders who held 5% or more shares in the company. And thus, the company has contravened the provisions of Section 129, read with Schedule 3 of the Companies Act 2013, thereby affecting the true and fair view. And so, because company did not disclose the name of the shareholders who held 5% or more shares in the company, so the company's accounts did not reveal the true and fair picture of the affairs of the company. Thus, the auditor has failed to comment on the same in the audit report. Now, auditor has not commented of this lapse on the part of the company. Hence, it is observed. Hence, it is observed that the company has contravened AS 18, read with Section 129, read with Schedule 3. So, what you have to see that all applicable accounting standards are complied with, and Section 129 requirement is complied with. Schedule 3 of the Companies Act requirements are also complied with, thereby affecting the true and fair view of the state of affairs of the company in the financial year 2017-18 and 2018-19 and 2019-20. So in these 3 financial years, the company has defaulted in disclosing the shareholders who had held shares more than 5%. Thus, the auditor has failed to comment on the same in the audit report for the aforesaid financial year. Now, in this case, having considered the facts and circumstances of the case, and after taking into account provisions of Rule 11 of the Company's Adjudication of Penalties Rule 2014, I hereby impose a penalty of 10,000 on Sri so-and-so, 5,000 on another director, and so-and-so. So the penalty has been imposed. Now I take another case, Peacock Iron Steel India Limited. The company violation of section 1171 of Companies Act 2013 and rules made thereunder during the procedural scrutiny of Form MGT 14 dated 11/3/2021. It is observed that said e-Form MGT 14 filed for filing the resolution dated 18/12/2020 regarding the change in main object of MOA by delay of 53 days. So this MGT 14 is prescribed for certain disclosure. That means if any change in main object has taken place or change in alteration in articles of association has taken place, then MGT 14 is required to be filed. Here in this case, company did not did not disclose. ROC wide adjudication order dated 13th January 2013 imposed a penalty of 91,800 on the company along with officer in default for non-complying with Section 117, read with Section 39 of Companies Act 2013 with respect to non-filing of resolution as per Section 117 of the Act. So penalty of rupees 15,300 was imposed on the company and officer in default 76,500. Now in another case, Steel Elconet Connect India Private Limited, whereas Steel Connect India Private Limited is a company registered under the Companies Act in the state of so-and-so, and presently having a registered office at so-and-so. During the procedural verification of the records of the company, it has observed that the company has failed to file annual return and balance sheet for the financial year 2016-17 to 2019-20 as per the requirement of the provisions of section 92(4) and 137(1). So under 92 you have to file annual return, under 137 you have to file financial statement. Company has defaulted in filing both for the year 2016-17 to 2019-20. Thus, the company and its board of directors, liquidator, resolution professional at the relevant time have violated the aforesaid provisions of the Companies Act. So, it is a company which is under insolvency resolution process. So, RP, resolution professional, are liquidator. So, in this case, the RP was appointed first, then company went into liquidation and the liquidator was appointed. So here, even if the company is under resolution process, then RP has to see that the financial statements are duly filed, annual return is duly filed. So here the RP and liquidator and board was also responsible for non-filing the annual return under section 92(4) and financial statement under section 137(1). So what is the order passed in this matter? Having considered the fact and circumstances of the case and submission made by the presenting officer and a role submission made by so-and-so ex-liquidator during the hearing, and after taking into account the factors above, I hereby impose a penalty on company and its director as per table below for violation of section 92 and 137 of the Companies Act. I am the opinion that the penalty is commensurate with so-and-so. So penalty on director, resolution professional was also, you can see the resolution professional is Ramachandra D. Chaudhary. On resolution professional also, a penalty of rupees 1,69,200 has been imposed. So resolution professional has to be very careful that after his appointment by NCLT, he should file in time the financial statement and annual return of the company. And penalty was also imposed on ex-liquidator, was in charge of the company from so-and-so date. On ex-liquidator also, the penalty of rupees 2,03,400 has been imposed. Now I take another case. Messrs. Elgum India Productions Private Limited was incorporated on 1st January 2019, having its registered office under so-and-so. All the companies incorporated after so-and-so, the amendment with effect from 2nd November 2018, having share capital not to commence any business or any borrowing unless a declaration is filed. So in case of such companies, the declaration is to be filed with ROC within period of 180 days of the date of incorporation of the company in INC 20A. So the company had failed to file Form INC 20A within 6 months from its incorporation. Then last date for filing INC 20A was 1st June 2019, and the company filed form on 14th October 2019, and ROC levied penalty of rupees 1,50,000, that is 1 lakh on company and rupees 50,000 officer in default, since the company has filed form after 106 days. Since it exceeds 100 days, ROC imposed minimum penalty on the company. Now I take another case. It is under section 179(3)(o). this is a Nidhi company, was incorporated on December 2018. Company filed financial statement for 2018-19 and 19-20, but company failed to file MGT 14 of the board resolution under section 1173G, read with section 179(3)G of the Companies Act 2013. On scrutiny, ROC found that company has failed to file Form MGT 14 of adopted financial statement. After that, ROC issued notice and so-called notice to company on 2nd July 2021 for 2 years of default in filing MGT 14. Registrar of Companies Tamil Nadu passed an order imposing penalty like this. So you can see the penalty which has been imposed. Now, these are the orders passed by ROC. So I take up one order, ROC Qualier, in the matter of Regent Professional Academy Private Limited. The company Regent Professional Academy Private Limited filed the financial statement as a document with Registrar of Companies for the financial year 2021 through the portal of Ministry of Corporate Affairs and in section 137 of the Companies Act, so and so. However, the financial statement filed by the company were unsigned. So the financial statement which were filed by the company were unsigned. That is without the signature of the auditor and directors of the company, as per the provisions of section 134(1) of the Companies Act. The financial statement were required to be signed by the directors of the company on behalf of the board, and financials were required to accompany the auditor's report. So when you file the balance sheet, it must contain the signature of the directors also. And in many cases, when we file, we because of the size problem, the balance sheet, their signature, if the balance sheet is filed with their signature, so there is it is not accepted within the prescribed data limit. So in this case, the financial statement which were duly signed by the directors and auditor was not filed, and unsigned balance sheet was filed with the company, so there was a violation. Upon the scrutiny of the document filed by the company, the Directorate of Ministry of Corporate observed that the company had filed the financial statement without the signature of auditor and directors. The Registrar of Companies Gwalior received directions from the Regional Director of Northwestern Region, wide letter dated so and so, to initiate action against the Regent Professional Academy Private Limited and its director, since the company had filed its financial statement for the financial year 2020-21 without the signature of auditor and director, which constituted an offence under the Companies Act 2013. Now, order passed by ROC, you can see on company penalty of rupees 3 lakh has been imposed. On 2 directors, 50,000 each has been imposed. The total penalty of 4 lakh has been imposed. Then another order passed by ROC Coimbatore in the matter of Martin Multi Projects Private Limited. The company filed the annual financial statement at the MCA portal in AOC 4 XBRL format for the year for financial year 2018-19 and 19-20. As per the annual financial statement for the above 2 financial year, the company had entered into contracts or arrangement with the related parties. Now, if you enter into any contract with the related parties, then the required disclosure has to be made, and had also made the required disclosure in the notes forming part of the financial statements under its note heading number 10. However, in the board report for those 2 financial years made the disclosure stating that the company did not enter into any contract arrangement with the related parties. Here, board report mentions that the company has not entered into any related party transaction. But note number 10 of the accounts mention that the company has entered into related party transaction. and required disclosure has been made in the said note with whom the company has entered into related party transaction. The above disclosure made in the board report was quite contrary to the disclosure made in the notes of the annual financial statements, resulting in the company having made a false disclosure in its board report. Now, board report doesn't mention about the related party transaction, whereas the financial statements in under note 10, it gives the details of the transaction which has been entered into with the related party. So board report there is no disclosure about related party transaction. The company and its director, having realized that they had violated the provisions of Section 134 of the Companies Act 2013 by not filing AOC 2. Now, there is one prescribed form, AOC 2, where the related party transactions are disclosed, and it is a part of director's report. With regard to related party transaction for the financial year 2018-19, 19-20, in the board report, by making a false disclosure, decided to file suo motu. Now, company realized that it has not disclosed in the board report, whereas in financial statement under note number 10, the disclosure has been made. So, board report contains a false disclosure. So then, company having realized it made suo motu adjudication application, company on its own, then admitting the violation. So company admitted that it has violated the provisions. Now, violation of law. Subsection 3H of Section 134 provides that there shall be attached a statement laid before the company's general meeting, report by board of directors, which shall include particulars of the contacts or arrangement with related parties referred to in subsection 1 of Section 188 in the prescribed format. Though now penalty has been imposed under Section 134(8). If the company is in default in complying with the provisions of this section, the company shall be liable to a penalty of 3 lakh rupees, and every officer of the company is in default shall also be liable to a penalty of rupees 50,000. Now, adjudicating officer has imposed penalty of rupees 1,50,000 because it is a small company. So 50% of the prescribed penalty is 3 lakh. So 50% of 3 lakh is 1,50,000. So company, a penalty of rupees 1,50,000 has been imposed, and on 2 directors 50,000 each has been imposed. Now I take another case, order passed by ROC Calcutta on director not having a DIN number. So earlier I gave you a case where SIN number was not mentioned in letterhead, on letterhead. Now the company has not mentioned DIN number of the director. So company has skipped the DIN number, skipped mentioning of the number of the director. So it attacks a penalty. So facts of this case. In August 2021, Sandeep Kumar was appointed as an additional director of Messrs. AIS Online Private Limited after disclosing his DIN number so-and-so as required by the Companies Act 2013. The company promptly filed appointment via Form DIR 12, which was approved by the Registrar of Companies on August 28, 2021. Subsequently, the company changed its name to Messrs. Obstacle Integration Private Limited in March 2022. In April 2022, during inspection under Section 206(4) of the Companies Act 2013, officials noted discrepancies in Sandeep Kumar's DIN details compared to data maintained at MCA portal. So the DIN number which was mentioned did not tally with the data maintained at the MCA portal. The Registrar of Companies adjudicating officer observed from the above details that there were differences in the data with respect to the address. What was the difference? Address was not matching PAN and email ID and mobile number of the director and also DIN status of the company was shown to be deactivated. So violation. No person should be appointed director of the company unless he has been allotted director identification number, that is DIN, under section 154 of the Companies Act 2013, whereas in this case, the concerned director was appointed on a day when he was not in possession of DIN. So the DIN number which he gave was wrong. So it was assumed that he is not having a DIN number. So he could not be appointed as a director, because a director must have a DIN. Unless he has a DIN, he cannot even be appointed as a director. So since the concerned director violated the provisions of the company of section 152(3) of the Companies Act 2013 relating to DIN regulation, the concerned director was liable for penal action as provided under section 159 of the Companies Act 2013. Now, in this case, the default was of 631 days. So maximum penalty is 50,000. So 500 into 631 days comes to 3,15,500 plus 50,000. So penalty of rupees 3,65,000 was imposed on Mr. Sandeep Kumar, director, for not providing accurate DIN details. Now, this is another order passed by ROC Gujarat, Dadar and Nagar Haveli. The company came up with ESOP scheme named KFPL ESOP 2021 for the issue of 1379 equity shares of the company during financial year 2021-22, and the necessary approval was given for the scheme on 3rd September 2021. So if any ESOP scheme is formulated, then it should be approved by shareholders of the company, and this scheme was duly approved as per the law. On 13 September 2021, the equity share of 500 out of 1379 were allotted to Sri Abhishek Kandoi under ESOP scheme at ₹10 per share. Further to the above, on 1st December 2022, the company allotted 200 shares to Sri Abhishek Kandoi and further allotment of 895 shares to Sri Divyans Mathur. So out of 1379, you will find that 500 shares plus 200 shares were issued to Abhishek Kandoi and 895 shares were issued to Sri Divyans Mathur. With the above three allotment, the company had allotted an overall allotment of 1595 under ESOP scheme. So company allotted total 1595 shares against the approval of 1379 equity shares. Thus, the company had allotted 216 shares in excess of the approval given by the Board of Directors under the ESOP scheme on 1st December 2022, that is allotment of 1595 shares had taken place as against approval of 1379 shares, resulting into excess allotment of 216 shares. The company thereafter filed the return of allotment in E-Form Pass 3 pursuant to Rule 12 and 14 of the company's Prospectus and Allotment Securities Rule 2014, read with provision of Section 2013. The company realized the violation of Section 62(1)(b) of the Companies Act 2013. So, the violation had occurred under Section 62(1)(b) of the Companies Act by allotting the excess shares of 200 shares under ESOP scheme before the waiting period of 1 year and decided to take rectification action. The company, upon realizing the default committed, decided to file a suo motu compounding application. Now, violation of law. The company unintentionally exceeded the approved allotment of 216 shares under ESOP scheme before the completion of 1 year vesting period, violating Section 62(1)(b) of the Companies Act 2013. So, under the ESOP scheme, there is a vesting period, then thereafter there is an exercise period, and here the excess allotment of 216 shares was made. Upon discovering the error, the company voluntarily prepared a compounding application and submitted it to the Regional Director, Northwestern Region, Ahmedabad, with a copy to ROC Ahmedabad. Now, see how much penalty has been imposed. Period of violation 454 days. Penalty for default under Section 450, 10,000 plus 1,000 per day. So total is penalty to be imposed as per Section 450 of the Act, 4,64,000 on company and 3 directors. Maximum penalty which can be imposed is the 2 lakh, because it is a small company. So maximum penalty is 2 lakh, and each director, which is 50%, which is 50,000 each. So maximum penalty which can be imposed 50,000, and 50% of that 50,000 is 25,000. So on company, penalty of 2 lakh was imposed, and on each director 25,000 penalty was imposed. So total 2,75,000 penalty has been imposed in this case. Now, another case, Mawana Foods Private Limited. ROC is in receipt of application on 22/6/2023 JNL 1 number so and so from the company for adjudication of penalties for default under Section 203 of the Act. 203 deals with key managerial personnel. As per application, the provisions related to appointment of KMP as provided under Section 203 of the Act is applicable on the company. So the company had to appoint key managerial personnel. Give me 1 minute time. Give me 2 minutes time. So company, accordingly, company ought to have a managing director. Under Section 203, the company should have a managing director or CEO or manager, and in their absence, a full-time director on or before 21st April 2022. However, the company at a meeting of the board, which was held on 26 December 2022, appointed Anurag Mishra as manager. So 203 deals with KMP. And who are the KMP? KMP are managing director, full-time director, CFO, chief financial officer, company secretary, and manager. So the company manager under the Companies Act. So manager is one who is given responsibility of substantial management of the affairs of the company. So he becomes a manager. So there was a delay in appointment of manager under Section 203. The company ought to have appointed once the earlier managing director had resigned on 22nd October 2021, but the vacancy was filled late, so there was a violation. An SC and the matter was issued on 15/9/2023, and in response to which the company submitted a reply on 26/9/2023, wherein all the applicants have admitted the default and requested remission of penalty amount. So the company and its officers in default admitted that there has been violation. In view of the submission made in the reply and further request made by the email dated so-and-so, a hearing in the matter was scheduled for oral submission on 16/1/2024. Sri Ranjit Pandey PCS and Sri Alok Tripathi PCS authorized representative of the company appeared in the matter. They have submitted the reply sought from them regarding so-called notice issued to the company. It was reiterated that there is a default of 249 days in appointing manager in the company and requested for lenient view while levying a penalty. So, Mr. Ranjit Pandey along with Alok Tripathi PCS both appeared and admitted that there has been a delay up to 49 days in appointing manager. So there was a violation of Section 203 of the Companies Act. It is admitted by them. But they said a lenient view should be taken of the violation. Thus, as per submission made by the company, it is evident that the company was required to appoint KMP on or before 21/4/2022, but manager in the company was appointed on 26/12/2022 with a delay of 249 days. So delay has been considered by the authorized representative of the company. Okay, delay has occurred, so there has been a violation of Section 203 of the Companies Act, but they pleaded that lenient view should be taken of the violation. Now, see what the penalty has been imposed. 5 lakh on the company, and on each director 50,000. There was a delay of say 249 days in 4 cases and 167 days in 1 case. So on 4 director, penalty of rupees 2,90,000 each was imposed, and on Sachin Sharma, in whose case the delay was 167 days, 50,000 plus 167,000, 2,17,000 penalty has been imposed. Now, this is another case, Excel Vehicles Private Limited. The Registrar of Companies Gwalior undertook an inquiry as per directions of the Ministry of Corporate Affairs, so and so, upon Excel Vehicles Private Limited pursuant to subsection 4 of Section 206 of the Companies Act 2013 as per the directives given to him on 22nd July 2022. During the course of inquiry conducted under subsection 4 of Section 206 of the Companies Act 2013, it was found that the company and directors had claimed to have received rupees 14.99 crore towards subscription of 15 lakh shares as share application money towards share allotment. Against the above receipt of the money as claimed by the directors, the company allotted shares on 25th February 2013 and also on 31st August 2013. Now, during the course of inquiry, so and so, facts of the case. 1 minute. Order passed by the Registrar Companies, Messrs. Excel Vehicle, under Section 10 of Section 42 of the Companies Act. So, on Excel Vehicle, you can see the penalty of 2 crore has been imposed. On the company, the penalty of rupees 2 crore has been imposed. Now I take another case, Hums I-Ticket Private Limited. The central government assigned an officer to conduct inquiry into Hums I-Tickets Private. It is a travel company under Section 206(4) of the Companies Act. Upon conducting the inquiry, the officer submitted his inspection report to the Director of Ministry of Corporate Affairs. From the inspection report submitted, it was observed that the balance sheet as at 31st March 2018 under Note 7 annexed to the balance sheet, the amount shown under trade payable for supplies was 28,25,18,082 in the year ended 31st March 2018. However, in the balance sheet as at 31st March 2019, the amount of trade payable for supplies was shown as 31,27,87,721 for the previous reporting year. So in balance sheet, you have to mention previous year figure also. So in previous year figure, the trade payable amount was mentioned as 31 crore 27 lakh 87,721, whereas in the earlier balance sheet, previous year balance sheet, the figure was 28 crore 25 lakh. So there was a difference of about 3 crores. So there was a discrepancy in previous year figure with respect to trade payables or supplies. Now, also the amount reflected under the head other current liabilities in note number 8 in the year ended at so and so, the amount was shown at 24 crore 77 lakh 54,248 in the balance sheet as on 31st March 2018, but the amount reflected under the head other current liabilities for the previous reporting year, 31st March 2018, against 24 crore 77 lakh 64,248, an amount of rupees 22 crore 27 lakh 67,470 has been shown. So there was a difference. The inquiry officer reported that subject company had regrouped amounts without properly disclosing this in the notes to the account. So what company did in the next year, in previous year figure, the figures were regrouped. So in regrouping, there were some differences in the figures, which the company ought to have pointed out. Because of regrouping, there has been this difference. The figures shown in the one financial year should exactly match when used as a part of previous accounting period in the next financial year. How the subject company had deliberately changed the figures and explained it as part of regrouping, which was unacceptable. So what company took stand, because we have regrouped the figure, so the difference is there, whereas the requirement is that you cannot change the figures of the previous year. They have to appear as it is in the previous year figure of the next year. So regrouping trade payable in 1 year to advances from customer and accrued expenses in another year was totally unacceptable. The director stated in their director's responsibility statement that they had selected such accounting policies and applied them consistently and made judgments and estimates that are reasonable and prudent to give a true and fair view of the state of affairs of the company at the end of financial year of so and so. So what order has been passed by the ROC? The penalty of rupees 3 lakh has been imposed on the company and on director 50,000. Now another case. An inquiry under section 206 of the Companies Act was conducted by the inquiry officer regarding a company. It was observed that the minutes of the Board of Directors dated 29/11/2007 were not compliant. So here the minutes of the meeting of the Board of Directors, they were not compliant. They were not bound properly. So what was the non-compliance? The minutes are to be periodically bound. So minutes of Board of Directors in this case were not periodically bound properly, and the same were not dated. And the minutes should also have a consecutive serial number, and it should be dated also, and not mentioned place where they were signed. So when the minutes are signed, the chairman should also mention where the place where he has signed. The non-compliance of violate the provisions of section 118(10) of the Companies Act 2013 and Secretarial Standard 1 issued by ICSI. So the Institute of Company Secretaries has issued accounting Secretarial Standard 1, which deals with board meetings, and 2 deals with AGM. So during statement recorded under section 2073, the director, Mr. Yogesh Mehta, it was stated that the minutes have been rectified by adding the place and date of signing. It was subsequently rectified, and the company will ensure proper binding in the future. So company admitted that it was not properly bound. The minutes was not dated. So company rectified the mistake and then took a stand that mistakes have been rectified. Now, however, the rectification was deemed unsatisfactory As per the inquiry officer's finding, a necessary action was directed by the competent authority. Consequently, an adjudication notice to the company was issued, company and its officers under section 454(4), read with section 118 of the Companies Act and Rule 3(2) of the Companies Adjudication of Penalty Rule 2014. The company and director were required to respond to the notice, but only Mr. Manoranjan so-and-so responded. The former company secretary replied, stating his resignation from the company since 7/1/2013. So company secretary took a stand that he had already resigned from the company on 7/1/2013. The reply of Manoranjan Nisikant Karmakar, company secretary, was also deemed unsatisfactory, and hence the company and its officer in default are liable for penal action under section 118(11) of the Companies Act 2013. So what was the penalty violation? The company has violated the provision of section 118(10) of the Companies Act, read with Secretarial Standard 1 issued by ICSI. The company is liable for action under section 118(11) of the Companies Act 2013. So here you can see the penalty which has been imposed on company, which is Windward India Limited, 25,000 under section 118, on 4 directors, 5,000 each, total 45,000. फिर violation another section 118 SS1 on company 25,000, on 4 directors 5,000 each. Now ROC imposes hefty fine on company and its directors for calling EGM without notice. Here the company has called EGM without serving notice. An inquiry into the affairs of the company was conducted by the inspecting officials from the office of ROC Pune, and during the inquiry and examination of record, the inspecting officer observed the following. The company had issued a notice on 24th August 2019 calling for an extraordinary general meeting of the company, and the meeting was held on the same day. So a meeting was called, issued a notice was issued on 24th August 2019, and on the same day EOGM was held, which in my opinion is not possible. Subsequent to the conclusion meeting, the company had filed MGT 14 on 28th August 2019. The inspecting official had noticed from the record that the company had not issued the notice by giving 21 clear days notice. Now in this case, notice was given on 24th August 2019. EOGM was also held on the same date, whereas the company was required to give 21 days notice, clear notice, as required under subsection 1 of section 101 of the Companies Act 2013, and called for meeting at a shorter notice. So the company had convened the notice, EOGM, at a shorter notice, which was not permissible. As per provisions of section 101(1), a meeting could be called by giving a shorter notice if consent in writing. You can call the meeting at a shorter notice if consent in writing or by electronic mode was accorded thereto by members of the company holding majority number of members entitled to vote and who represent not less than 95%. There are two requirements. 95% have voting power and majority number of members should approve. Then only you can call any meeting of the shareholder at a shorter notice. Otherwise, you cannot. So the requirement is 95% shareholder having voting power. They should vote, call, and the supposing company has 100 members, so 51 members should be there. The inspecting official had observed that if Form MGT 14 filed by the company did not contain the shorter notice consent obtained, so the shorter notice consent as per requirement of section 1011 was not complied with. which required that 95% of the members' voting power and majority number should give their consent in writing. Then only you can call a meeting at a shorter notice. The inspecting officer had a strong reason to believe that the company and directors had violated provisions of Section 101(1) of the Companies Act by issuing a notice for calling the extraordinary general meeting, either giving the requisite 21 days or obtain the consent for calling the meeting at a shorter note. Therefore, the company and director were liable for action under Section 450 of the Companies Act. So what was the penalty imposed? 2 lakh on the company and 50,000 each on the two directors. Now the list of companies had conducted inspection of the company. Company name is Windward India through inspecting official. During the inspection and inquiry, the inspecting officer had come across a reply letter written by one of the director of the company rated so and so to the list of companies which did not contain the director identification number. Now this was the case I was referring, that even if the DIN number is not mentioned, it is violation. The inspecting official took up the matter with the company and reply provided by the company was found unsatisfactory. Thereafter, the matter was referred to the competent authority at the Director of Ministry of Corporate Affairs. Now, violation pursuant to Rule 312 of Companies Adjudication Penalty Rule 2014 and the provision to the said rule so and so. The unsigned copies of the financial statement so and so pursuant to Section 158. Every person or company while furnishing any return information or particular as are required to be furnished under this act shall have to mandatorily mention the director identification number. So while the company is furnishing any return, any information, any particular, then the DIN number should be mentioned in such return information or particular as the case may be. So this was violated. So on company, 50,000 penalty was imposed, on director 50,000 penalty was imposed. I think I have, can you listen me? Hello?
Yes, sir.
I can go on, but I think I have covered sufficiently many orders.
Yes, sir.
So
Yes, sir.
if there are any question, I will take up.
Yes, sir. Participants, we request you to post your questions in the Q&A box or on the chat box, and they will be taken up. Yes, Mr. Path, you can please check. There is a question, I think, in the chat
Yes,
box.
there's one question by Prajeet here. So the question is, can a company under default rely on judgments passed by High Court or Supreme Court and quote for lower penalty to the adjudicating officer or the regional director?
I mean, regional director has a discretion to impose lower penalty than what is prescribed. That I have also covered. That a regional director can do it. It has the discretion. But ROC cannot impose lesser penalty than what is minimum prescribed. But RD can do it, certainly.
Yes,
Sir, one question. You have rightly covered about unsigned balance sheet and penalty thereof under adjudication. There are many directors traveling and they are insisting that can we put SD with the name. Under this, what is the ROC's requirement or status?
I mean, actually, when you file signed balance sheet, there is invariably this size problem is there. So most of the time, the unsigned balance sheets are filed and which they are accepted also.
I am talking about SD because some directors are
SD
traveling.
you can put SD. You
SD
put
with the name.
with SD, right?
Even auditor, if the board meeting held Singapore or outstation, an auditor is in India. So whether it is allowed, whether it is an offense or it is a compliance.
Auditor, can you repeat your question?
Similarly, when board meeting for adoption of account happens in overseas, any country, Singapore, Hong Kong, anywhere, and auditor is India, right? They can sign subsequently, I know that, but whether SD is allowed in case of auditor, is it compliance of law or signature is desirable?
In my opinion, the auditor's balance sheet, auditor's report should be signed.
Agreed, sir. That is what our governance says, and it has to be followed. Thank you.
Any further questions, you can put it in the chat box.
There is one in Q&A, pathway.
In Q&A box?
Yes.
Right. The question by Shailaja. The question is, can the adjudicating officer ask to make good the default before imposing penalty?
He can ask to make good default, and then order can be passed. He can direct the company to make good the default, and then hearing is over, default has been made good, and then order will be passed only when, because it is noted in the order also that default has been made good.
All right. There's one more question by Nikunj. The question is, can RD impose nil penalty?
RD can impose nil penalty also. He had the discretion.
Okay.
He can modify, set aside the order. He can modify the order, reduce the penalty, or set aside the order also.
Okay.
But generally, I have seen in practice, RD takes a stand that he has no power to impose penalty lesser than what is minimum prescribed. So
Right.
RD generally, they do not impose the penalty which is lesser than the minimum penalty. But the RD has, I think Southern region has imposed penalty which is lesser than the minimum penalty.
Right. So there's one more question by Mr. Rakesh. The question is, affixing digital signature on financials, can it be said to be complied with?
It is complied with. You can put.
All right.
I guess we'll wait for a minute or two for if any other questions. So with your permission, can we circulate the presentation?
Yeah, please do.
Okay.
Because it's quite exhaustive.
Thank you very much, sir. Thank you.
You have my permission. There is no issue.
Okay. Thank you very much, sir.
I always believe in sharing knowledge.
Yes, sir. That's what I told at the start, that the institution actually, sir. That's exactly what it is. Thank you very much, sir. Yes, any more questions, dear participants?
I can't see any more.
There is one, I think. Okay.
In the Q&A box,
okay.
yes.
Yeah. So I think we will
Sir,
conclude
nice.
with the, yes, sir. We'll conclude with the session. Thank you very much, Jain sir. And for a formal vote of thanks, I invite Kaushik sir, CS Kaushik Javeris ji, to please give a formal vote of thanks, sir.
Thank you, Raj. I hope I'm audible.
Yes, sir.
It's my proud pleasure and privilege to express very well-deserved vote of thanks to none other than our own Dr. S.K. Jain. His energy level is superb, amazing. At the end of the working day, the way he has presented in a very lucid language, in a simplified manner, explaining all the concept, clarified doubts and questions, and process and procedure of adjudication. It was amazing, sir. On behalf of Chamber of Tax Consultant, I propose very well-deserved vote of thanks to Jain sir on behalf of my Allied Law Committee, my president, my chairperson and office bearer, and entire committee, I propose well-deserved vote of thanks. And your time was really valuable to us. Dr. Jain sir is always available for anyone, right from senior to student. You ask him question and your answer will be there. That is an assurance from such a senior person. I would also like to thank our entire team, logistic staff at Chamber of Tax Consultants for supporting and making this event very successful. So thank you very much. Thank you all. Thank you, Jain.
Thank
We
you very
have
much.
shared
Yes,
the link
Park
for the feedback on the chat box. So I would request one and all to kindly provide your valuable feedback through that link.
The links have been pasted. We request all attendees to kindly share the feedback. And we will be back with lot and many more sessions on various topics under the corporate and allied laws. Dear attendees, we are looking forward. Thank you very much. We will conclude the meeting. Thank you very much.
Participation is not possible. So all the
Yes.
success to all participants on such a working day. The participants were excellent in number. Amazing. They have registered almost 375 plus, and most of them have also attended, and that was fantastic. That speaks volume for faculty and
very good number.
Yes, sir. Yes, sir. And considering the first well begun is half done, that's how it is.
Yes.
Yes. Thank you very much. Thank you very much, dear all. We'll see you soon again. Thank you very much.